their establishment. Today's webinar is enabling the startups, laws and compliance. All of you know that starting business itself is a problem, particularly for startup. A lot of problems will be there, right from requirement of money, manpower. Only tool they will have is the product or the concept. Otherwise, nothing will be available for a startup. But when you start a business, naturally you are surrounded by so many requirements. Particularly, nowadays, lot of laws are applicable for each and every entity. So it forces you to take care of various requirements and ensure that you are running the business professionally and ensuring total compliance. Because now, as a part of corporate governance, compliance also one of the most important aspects which everyone should follow. So from this angle, definitely today's webinar will be a very thoughtful webinar. Definitely there will be good takeaways for all of us. And I'm really privileged to be participating in this webinar as a participant also. Now, my privilege to introduce today's speaker, moderator, Redha. Actually, 1 minute, I will take out this printout. So we are having moderator today, CA Rekha Umshiv. She is a BTech, ACA and DISA. Her professional background is that partner and practicing chartered accountant in Chennai for the 30-year-old firm SC Pillai & Co. Chartered Accounts with head office in Trivandrum. Most important thing is she is the first Keralite women representation at the Southern India Regional Council of ICI, Regional Council member till date. Expertise in data warehouse tools with solid corporate exposure of 6 years as senior software engineer with corporate giants like Accenture, Mindtree, and now L&T, of course. Electrical and electronics engineering from Kerala University with university rank and city topper of CA inter exams. We have seen BTech with MBA. I have seen that combination. First time I am coming across a BTech with a chartered accountant course. Really great. Guest faculty and reviewer with the Board of Studies ICA. Nominated member of subject-specific group for quality enhancement of BOS and ICA, faculty for CA, CMA, CS for auditing, assurance, direct access, and enterprise information systems. Empaneled soft skill trainer with the student skill development enrichment board. ICA having facilitated various management communication skill courses. And she is also ex officio member of the Chengalpet branch also. I think her background is very solid for being today's moderator. That too, the subject is enabling the startups, law and compliance. All the viewers who join today's webinar definitely will be benefited from this topic of enabling the startups. I leave the floor to the moderator, CA.
Firstly, thank you, Suresh sir, for this introduction. So I think first I should thank Gopalakrishna Raju sir and the Hindustan Chamber of Commerce for giving me this opportunity. So first, good evening to all the members and the participants who have registered for the session. I take immense pleasure in inviting you all for the session on enabling startups and law compliance. So if you ask me, as Suresh sir has said, this is one of the topics that is widely discussed, especially post-pandemic and even before that also. So everyone will be curious to know what is a startup. So whenever you hear the word startup, it is something linked to innovation, some new idea, a new concept. So what are the laws or whether any compliance is required for the startup? How the startups can contribute to the economic growth of a particular nation? So when the startups itself, it will be like more jobs, more employment, and as a result, the economy itself will grow. So is it only restricted to that, or is there any compliance from the part of the startup or persons who are starting that startup? So now we have like two, I don't think I have to introduce the faculties for the day. So we have two eminent speakers, and I can say very dynamic and very vibrant persons as the faculties for the day, Gopalakrishna Raju sir and CS Dhanapal sir. So I think before the session, Gopal Krishna Raju sir, I had a discussion with sir, and sir was telling to cut short the introduction to the minimum possible level. So sorry, sir, I had to tell you this. Seeing the profile of both the speakers, I can't just restrict to 60 minutes, 60 seconds. Okay, so we have such eminent personalities, and CA Dr. Gopalakrishna Raju sir is a practicing chartered accountant, not just a practicing chartered accountant. He hails from a family of chartered accountants. His parents, brother, wife, everyone are in the same field. And also, he's an insolvency professional as well as a registered valuer. So, if I have to tell about his qualification, the list goes on. So, it is like so many degrees he has taken, especially the most catchy thing what I saw is he has a twin postgraduate diploma, especially in operation research and finance management from the Pondicherry University. Something we don't see in all the speakers. And also, he is a associate member of the ICWA as well as the Company Secretaries of India (ICSI). He has also qualified various certificate courses, including the Diploma in Information System Audit, FAFD, Forensic Accounting and Fraud Detection, Indian Accounting Standards, International Trade Laws, and World Trade Organization. Now, to tell about his nomination, now he's an active Rotarian as well as he is a member of the Bombay Chartered Accountants Society, the Madras Management Association, as well as a member of the Society of Auditors, life member of the Society of Auditors. Now, if I have to tell about the nomination list, the list is very, very huge. Almost in all the academic institutions, University of Madras, we can see the Civet College, the New College, Guru Nanak College, almost all the educational institutions he is in the academic mode. So I don't think we'll have a better person to address the session and take up the topic on enabling startups. So welcome you, sir, to the session. The session is all yours.
Thank you very much, madam. President of Hindustan Chamber of Commerce, CA Suresh, and moderator of this session, CA Rekha Umashiv, and my co-speaker and chairman of the Committee for Corporate Laws of Hindustan Chamber of Commerce, CS Dr. Dhanapal, and all the participants virtually connected to this special webinar on startups, enabling startups. A warm good evening to one and all. Let me thank first Hindustan Chamber and its president for this wonderful opportunity to share our thoughts on the developments on this particular subject. Let me directly go into this topic. We'll be dealing with the startup initiatives, especially the Government of India through the Ministry of Commerce and Industry. I repeat, through the Ministry of Commerce and Industry, they have brought out notification with respect to startups. And all this started way back in 2016, 16th of January 2016. So it's almost 6 years is over. On 16th of January 2016, our Pradhan Mantri, he identified 16 young achievers. So 2016, 16th January, 16 young achievers in different fields, one in education, one in manufacture, one in service sector. So different fields, and they were showcased before the country that they are all young achievers. Young achievers. And with the slogan at the end that India will not be henceforth a country of job seekers, will be a country of job givers. That is the objective of the Startup India. And to enable the entire ecosystem, you need more support, especially from the government side. You need to give them many support, especially from incorporation. Number two, benefits with respect to ease of doing business. Number 3, with respect to giving any exemptions for them from a tax perspective. Now, since myself and the moderator, we are all from, and Dhanapal, we are all from the finance stream. And I will also include our president, Mr. K. Suresh, is also a chartered accountant, and he heads a very important portfolio, finance portfolio in one of the important companies in Chennai. So, we will be focusing today's discussion towards the taxation front and also the various initiatives as a professional, as a finance professional, we can lend support and also a hand-holding exercise we can do to make an entrepreneur who has an idea and a saleable idea, a marketable idea, to actually come out successfully. I want to share one statistics. Started in 2016. In the year 16-17 itself, 726 startups were recognized. They were given recognition. Well, and till last year, that is 21-22, till March 22, 65,861 startups were recognized across the country. Good. Now, I'll give you another interesting number. All over India, there are 773 districts, and the 65,861 startups have emerged from 640 districts. That means it is almost the Startup India movement has reached every corner. So the major corners of the country have been covered. Good. Now, what is startup? I will start from the word called startup. Good. We had a notification given by the Ministry of Commerce and Industry, and that notification, first notification came in 11th April 2018. Then it was superseded on 16th January 2019, and again it was superseded on 19th February 2019. So this is the latest notification given by the Ministry of Commerce and Industry, and under that notification, this was issued by DPIIT. I repeat, this was issued by DPIIT, meaning Department for Promotion of Industry and Internal Trade. So this notification is the primary notification for us to understand what a startup is. And they give 3 conditions. So a child will always be a child for a mother. But a startup, will it be always startup? No. A company which we start, a startup entity which we start, we can call it as a startup entity for 10 years. I repeat the word, for 10 years, we can call that as the recognition is given as a startup. Wow. Then second, can it be, can I replicate my friend, my relative who has been doing a business? Can I replicate their business, their service industry, their manufacturing industry, their trading sector? Can I replicate it? Will that be considered as a startup? So just by lighting a kuttu velakku and then opening the shutters of a shop or cutting the ribbon of a factory, will that be called as a startup? No, that is not startup. Startup is actually very interesting terminology where they say, first you should be any one of these 3. It should be a private limited company or a registered partnership firm under the Partnership Act 1932 or a registered limited liability partnership. So an LLP or a private limited company or a registered partnership firm. They have not mentioned about public limited company. So this is a point we need to note. Second, I already mentioned that you will be called as a startup entity for 10 years maximum, or you achieve a turnover up to 100 crore. Maybe in the 7th year, up to 6 years, your turnover is less than 100 crore. In 7th year, you cross 100 crore, then you are not a startup entity. So from 7th year onwards, you become a non-startup, you become a large entity. Good. Now coming to the third most important condition that will make it a startup. This is where the replication of successful business. Actually, in chartered accountancy exam, in company secretary exam, in cost accounting exam, IAS exam, in all these, the toppers will be interviewed, and they will be called for to give motivational talk. What is it? How to become a topper? So people will replicate that success formula so that they will also succeed in that exam. That is not the case with the startup. Here, Pradhan Mantri is very clear that there should be some innovation. I'll give you an example of a person called Ruma Roca. Ruma Roca is you can Google this name. She was a very hale and healthy person, but she had a fancy towards learning the hearing impaired people, how they will understand the sign language. So sign language is a very special language which the otherwise abled people, they use it. Now this lady was very curious, and she went to a organization, that education institution, which was giving training to these specially abled people. They said, no, Ruma Roca, you are not, you are disqualified to be a student here because you don't have that impairment in hearing or in speech. So therefore you are disqualified. No, I want to learn this language. So after a lot of persuasion and convincing that she is a genuine, she wants to learn, she became a student, she qualified. You know what she did? She designed and all of you know about one film called Tare Zameen Par, which our star, Bollywood star Amir Khan, he acted in that movie. One of the very interesting point in that movie is the movie will say, for special children, there is the availability of the teachers are very limited, and that is where the star will come, the hero will come, and he will actually make jadoo. Now, Ruma Roca, she did one very interesting thing. She designed a curriculum for training people to become teachers to teach such specially abled children. And believe me, she trained 3,000 such people, and 80% of them are placed across the country. And there is one, there are many companies, many employers. They were actually asking Ruma Roca, please send employees who can't hear, who can't speak. Oh, and the job is guaranteed because they will not agitate, they will not discuss with their co-employees. So productivity is maximum. We are very happy, and salary also we will not negotiate. So all are very well placed. And that curriculum is an updated curriculum. She designed the curriculum, syllabus, the material, PowerPoint, everything. And that was a course for training a specialist. So teachers, it's a teacher training course. Like this, another 15 people were identified. One such person is Keitan, and he went, he was from Delhi. He went to United Kingdom to study electrical engineering in one of the prestigious university there. He returned from that particular university after qualifying, along with his British friend. Both of them, they came here, and it was like the Shah Rukh Khan movie Swadesh. So where he will go to one village and then he will bring water, electricity and all. These two gentlemen, they went to the remotest corner of Rajasthan, and some 17 to 18 villages, they didn't have electricity at all. They brought electricity. through solar and wind energy. And you will be surprised, they brought this concept because it was the scalable model, business model, profitable model. And have you ever heard about a concept called prepaid electricity? They brought it. So they collected the fee from the villagers, and there was a electricity meter that will actually measure it. Well, so Mr. Keitan and his friend, both of them are the Young Achiever Award, and Ruma Roka was an Young Achiever Award. Good. Now, what do we learn from these stories? Very simple. You need to innovate. And the third condition, which is the most important condition, is number one, the entity should work towards innovation, or there should be development or improvement. I repeat the word development or improvement of product, process, or service. So you have an existing factory, there is a process is there, you improve it. So that is also innovation. Or there should be a scalable business model which will generate employment or wealth creation. So this is fundamental. And the step one towards this is I need to get recognition as an eligible entity as a startup. I repeat, I need to get recognition as an eligible entity as a startup. Now, how do I get the... Yes, madam. You have something
So, no, sir. Actually, this when you told about the startup and the example you gave, so I was just many a times we have this pre-notion that only when there is some development it constitutes a startup. So even improvement in a particular process also you can actually call it. That's something very new to me. I always thought you have to develop something new. So I think this is a point I think most of you will be like, it will be enlightening for most of you. So even if it is a development, not just a development, an improvement also constitute a startup. And also I have heard this every time in order to an entity to be a startup, you need some recognition. And also once it is recognized as a startup, we have a lot of benefits in the Income Tax Act. So could you just throw some light on that, how we can...
Definitely. Now, the first step is first we need to get recognition. Now, how to get the recognition? Because you are a private limited company, you are either a LLP or you are a registered partnership firm. Now, how do I get recognition? So there is a mobile application. You can download it. But when you go to a Google Store or iOS, the Apple Store, type a startup, so many applications will be there. So please be careful that it is a recognized app of Ministry of Commerce and Industry, or you can go to the website of the ministry, startupindia.in. I repeat, startupindia.in. Straight away you can go there. App link will be there. Click that. If it is iOS or Google Store, it will be downloaded to your mobile. So that is the registered, that app you can use, or you can go to the portal itself. Startupindia.in portal itself you can go. There also you can register yourself. Now when you register, you have to give all your details, especially you have to fill up details about your company, your registration. Maybe since we are online, I can directly show you the website itself. The Startup India website, directly I can show you. So this is your yes. So can I? Yes. You are able to see this? Yeah.
Yes.
So this is the website of startupindia.gov.in. So where if you wish to register, so this is DPIIT recognition. Okay. So here, if you have to, I'll just blow this up, bigger one. So these are all the conditions which I mentioned. So I need not repeat it. Now click here for submitting your application for recognition as a startup. Now here you need to give your password and then log in. So you have to log in. But I'll show you the conditions for getting recognition. So These are the only two conditions that is required. One, you need a certificate, copy of the certificate of incorporation, and a write-up about the business, highlighting how it is working towards innovation development. So, meaning you need to, so these are the only two things. One is your certificate of incorporation, if it is a company or LLP, or your registration certificate, if it's a registered partnership firm. Then you have to give a write-up. Maybe you can give like a deck, or you can give like a PDF. So whether it is an innovation, whether it is a development of your process, product, or service, or whether it will scalable business model, you need to give a write-up. Now, this is where the recognition part, they may give a recognition. I repeat, they may recognize it, or they may reject the application also. Wow, they may reject it. Yes, there are so many applications. 65,861 recognition only has been given. Now, across the country, I want to make one observation that 56 sectors have been identified where recognition have been given. 56, like from tourism, service industry to manufacturing sector, to information technology, so all the biotechnology. So like that, 56 sectors have been identified where the recognition was given. Now, point to be noted, if the innovation is there or not, whether improvement is there or not, if the government they need to find out whether this innovation is genuine, because this recognition will be given by a board. I repeat, this recognition will be given by a board, and the name of the board is called Interministerial Board of Certification, and it comprises of 3 members. Joint Secretary from the Department of Promotion of Industry and Internal Trade. So that Joint Secretary will be the convener, and the other 2 members are representative of Biotechnology Department and Department of Science and Technology. So these are the 3 members. Now, your applications, they should be convinced. Now, if at all they need to get themselves convinced, they can send your application to the respective geographical area where you are, and especially to the nearest hub. Maybe if I am from Chennai and I make an application, the application will be sent to IIT Chennai, or to an institution of eminence, which is a government institution, to the head of the department of that. For example, I am doing some innovation in printing technology. So either it will go to IIT Printing Technology Department, or Anna University, Chennai. You have a hub. There is a Department of Printing Technology. So the application will be sent to the respective HOD, and they will send a call letter to me. I have to go there and demonstrate before them, and they will ask questions, and they may even invite other professors, students, research scholars. So they will grill me down, and all will be noted, minuted, and only when they are convinced, the report will be sent. Then only I will get a recognition. So this much of process is there, if at all I have not fulfilled the application properly. Second, now madam was asking about the benefits in this. I will say the main benefit which people they come for this is, just by getting recognition, I will get the tax exemption. No, not get tax exemption, because there is a separate form called form number 1. What is this? Section 80 IAC. Section 80 IAC, they say, if you are a startup, generally startup in first year, second year, they may not make profit. First, second, third year, they will be in bloodbath. Bloodbath means there will be loss. Second, third year, they may recoup. And Income Tax Act itself, you have a provision for set off and carry forward of losses. Maybe in 4th year, I make profit. So then I have to pay tax. So then I will apply for, I repeat, I will apply for a certificate from, and who has to give this certificate? Certificate has to be given by the ministry only, the Ministry of Commerce and Industry, the DPIIT. They only have to give the certificate. This is called 80 IAC certificate. This also you have to apply online. So there is a same startupindia.gov.in site. You can apply this. But when you have to apply, when you feel, when you are confident that I want this certificate from so and so year. And once you get this certificate, it will be consecutively, you will be eligible for exemption for 3 years. Of 10 years, any 3 consecutive years tax holiday. For example, my turnover is 80 crore. Turnover is 80 crore and I am making a profit of 10% net profit before tax. 8 crore is my profit. Wow. Entire 8 crore, that means 30% tax is 2.4 crore. Of course, tax rate is not 25% only. So on 8 crore, 25% is 2 crore. 2 crore will be saving for me. 100%. So entire profit is deductible. Okay, I mean, entire profit is deductible as a deduction under 80 IAC, provided I don't get only recognition, but I have to apply under Form 1. I repeat, I have to apply under Form 1, that is online, and in this I have to attach, I repeat, I have to attach the annual accounts of the last 3 years and also the income tax returns of the last 3 years. That is mandatory, and that they will go through that, and then that certificate will be issued. Only ministry will issue that certificate. So it is a connect between Ministry of Commerce and Industry and Ministry of Finance for this form number 1. So this is one fundamental, very important change that has been, I mean, one very important prerequisite for being a startup.
Similarly, we have an exemption under Section 56, subsection 270. So once you get a certification, as per my understanding, once you get a certification under this, you have 100% exemption from the profits of a startup. So how is this related to the Section 56, subsection 270?
Very good. Actually, if I am a startup, I will give you another example about Matthew K. Matthew. This gentleman was also a young innovator awardee with, under the golden hands of our Pradhan Mantri, the same 16th of January 2006. You know what he innovated? He is from Kottayam district, where he is from the rubber plantation area, where he was affected by malaria because of mosquito bite. Now, not only he, many people. So he thought the mosquito is a menace. We have to find some method to fight mosquito. And he was actually a diploma guy, and he used this whatever method. He found a solar-based mosquito destroyer. Solar-based mosquito destroyer, and he was awarded. And you will be happy. You will be surprised. Once he got the award, there were so many people who came forward to invest in that company, and all the good morning, good evening company and all got shaken. Oh my God, my company, how we are going to do business. Now, what is this 5627B? 5627B is about allotment of shares. Now, whenever you have an IPR, you have an innovation, you have a formula. Will you sell that formula at free? No. So therefore, if somebody is investing in your company, will you give the share at 10 rupees? No. So I need 50 lakhs. 50 lakhs divided by 10 rupees. Will I give 5 lakh shares? No. I will give shares at premium. So this is, and let the fair value be. If it's a new company, I have incorporated new company, and the new company value, what is the fair value? 10 rupees only. Now, if I am allotting shares above the fair value it can be 10 or 20 or 30 or 40 rupees, let us say. It is a 3-year-old company. I'm inviting investor. You are allotting share at 400 rupees for him. So 400 is the allotment price. Fair value is 40. Face value is 10. Income Tax Act 5627B says, if shares in a private limited company is allotted above fair value, 400 minus 40, 360 rupees per share is taxable in the hands of the company. Because who is receiving? The company is receiving. Now, if the company is a startup company, you charge any premium above fair value, not taxable. But there is a form number 2 you have to file. In form number 2, you have to say that the capital received inclusive of the premium does not exceed And also the previous capital plus the additional capital put together aggregate should not exceed 25 crores. Most important. Second most important condition is this is the declaration you have to give. This is the declaration you have to give every year. For 7 years, you have to give this declaration you have to give this declaration consecutively. You have to give for 7 years. If you are taking the exemption, you are taking the benefit of 5627B. And most important thing, the money what you have received, you cannot invest. I repeat, you are not supposed to invest in certain assets. Number one, will you invest in a residential house property? No. That money you are not supposed to invest in a residential house property. Second, can you give loans and advances to any other company? No, you cannot give loans and advances. Now, can I give as a capital contribution to any other entity? No, that also you cannot do. Then, can I invest in shares, securities, bond, debentures? No, that also you are not. These are all my declaration you have to give, and this declaration is not an online declaration. This is an offline declaration. Every year I have to give. And most important, can I invest in any jewelry? In a startup company, I have money. Can I invest in jewelry? No, madam, we cannot invest in a jewelry also. Then where I should invest? I can only invest in plant and machinery, land and building for construction of the factory. I can use it for working capital. So that means I have to use it only for business. Now, can I use that money to buy a BMW car or the new model Scorpio 2022 model, which is worth 25 lakhs? Can I do that? No. Motor vehicle, aircraft, yacht, provided the cost of that, if it is more than 10 lakhs, I am not supposed to invest in that also. So these are all the restrictions. So I have to give a declaration that that money I have not invested there, which you have received it at premium. So this is the interesting part of 5627B.
So even if you are getting that exemption as per the section, there are lots of restrictions. That's what I understand with respect to the investment from the capital contribution that you receive. So as you said, as per this 80 IAC, you have to obtain the certificate. So once we obtain the certification as per 80 IAC, is it forever or is there any revocation on the part of that certification?
Oh, very good, very good. Actually, one is this 5627B. The condition, if I violate, then my the 56 my certificate that has been given, that is what we call it as the recognition, will be revoked. Once the recognition is revoked, this recognition revocation, the notification, they are not very clear whether it will be revocation will be prospective or retrospective. There is a very important word they have used there. The revocation will be with retrospective effect. That means I have availed the 80 IAC certificate and I have also availed the 5627B, and any one condition I don't satisfy, DPIIT will revoke my recognition. If my recognition is revoked, my 80 IAC certificate Govinda, my 5627B benefit is also Govinda. So that means the difference between fair value and the price at which I received, that will become taxable. So, and from income tax perspective, you have already crossed a few years and the benefit you have received in so and so years. Those income will not be reopened and taxed in those years. Those income which you have got exemption will be taxed in the year of revocation. So that will be the seriousness, and tax liability will be what you have enjoyed the benefit, you have to shell it out. So this notification is very serious. So once I'm committed as a startup, I need to ensure that I satisfy the promise I have given to Government of India. Thereby, the real benefit is achieved.
Great.
So before I conclude and say thanks to Madam, I just want to share only one thing. To improve good health, there are good tips are there. That is, every day 30 push-ups, 30 sit-ups, 30 get-ups. Push-ups means the dandal, and 30 sit-ups means that the topu karanam, and 30 get-ups means you have to strengthen your core. You will actually get up from your lying position so that you strengthen your core. Very similar to that, if a startup has to be successful, they should also follow the push-up, sit-ups and get-ups. Push-ups is whenever the company is going down. Okay, so maybe from bloodbath they are reviving, and again it is going down. The energy should be there for them to actually bring it back. Second, sit-ups. Only by forming a company and by applying I will get the exemption, and unless in other ways you do activity, there should be self-motivation, initiative. Then only activity will be there, income will be there, some surplus will be there. Then there is a purpose of availing 80 IAC. Third is get up. So most important, get up means rise early in the morning. Otherwise, a very big question arises. So what is the fun in actually starting a startup and then not putting the activity? So therefore, and somebody was asking me, okay, everything is fine. All this sit up, get up, push up is fine for a startup. But the last what you said, getting up early in the morning, I have a reservation. Then I said very simple. If you want to get up early in the morning, follow one simple tip. While going to bed, take 4 tumbler of water, and then you go to sleep. Automatically, you will get up early in the morning.
Thank you so much, sir. And I think with your example, it's not just an enlightening session. I think the last few examples people will always remember, and those who have difficulty in getting up also, I think it's a very useful tip. I think that you've given. Thank you so much, sir. Now, you have told us about when an entity can be considered as a startup, about the certification, the income tax benefits. Now, another pressing issue is relating to the insolvency part. So what happens, or what is the procedure that we have to follow with respect to the insolvency? I think we have the next speaker for the day, very dynamic Dr. S. Dhanapal, sir. So first, I'm very privileged to introduce the next faculty for the day. He is Dhanapal, sir. Sir is a practicing company secretary and an insolvency professional, as well as a registered valuer. And the more highlighting thing is he's also a qualified lawyer from Chennai. And he's also the managing partner, and he's on practice with respect to corporate legal matters and insolvency and bankruptcy issues. He's a partner of Mrs. Dhanapal and Associates. This is a practicing company secretaries firm having almost 10 company secretaries, qualified company secretaries, and having a strength of 40 plus team. So, and again, to tell about his services, he has served in a term of 4 years from 2015 to 19. As a Southern India Regional Council member. Much privileged to introduce you, sir, with respect to this again. With respect to the Institute of Company Secretaries of India, he has also held the positions of the Secretary and Treasurer in the SIRC of ICSI. He also has a qualification apart from being a registered valuer insolvency professional. He is also a fellow member with the ICSI. Also, he has a Bachelor of Arts and Bachelor of Law from Dr. Ambedkar Law College. And he has authored numerous books. I think the list will be like too much to give the list of the books that he has authored. He has authored many books on company law, corporate law, national company law tribunal, insolvency and bankruptcy code. And many of these books are used as reference books in the Ministry of Corporate Affairs, Madras High Court, NCLT, IBBI, professional institutions. So I don't think we need a better speaker to address on this topic of insolvency relating to startups. And few of his books are LLP Made Easy, Handbook on Companies Act 2013, Guide to Companies Act 2013, then Guide to Insolvency and Bankruptcy Code. And he's also a member with the Hindustan Chamber of Commerce, the Madras Management Association, Tamil Nadu Chamber of Commerce, Chennai North Study Circle of SARC of ICSI. He's also a nominated member and he has held the following positions in various professional bodies, institutions, and universities. He's the elected council member at office and treasurer with the SIRC, company secretaries, chairman of the PDC committee, Professional Development Committee of ICSI. He's a chairman, council member with respect to the Hindustan Chamber of Commerce, chairman of the expert committee on corporate allied laws, CSR, governance and ethics, member of the executive committee for entrepreneurship development of Anna University, committee member CII, committee member of the accounting standard for local bodies SIRC. Now, as a writer, also he's a very passionate, especially on the legal matters governing corporate and individual, and numerous journals and newspapers also he has contributed. And I think as a speaker also, he has addressed more than 300 forums throughout the southern region and varied topics relating to corporate laws involving legal accounting, secretarial subjects, especially with respect to institute like ICI, ICSI, and even ICWA. So I think I'm very much privileged to have you for this session, sir, as a speaker to address on this topic. The session is all yours, sir. So you're muted.
Thanks a lot for your detailed introduction, madam. I think if I'm identified as a practicing company secretary would be great enough. I'll be doing justice what I'm doing. And good, our good friend Dr. Raju has deliberated more emotionally and technically the topic of startup, because I know he's more associated with the startup from day one when the government has initiated the process of startup. So he was into that. So that's the reason when we were having a discussion that we decided, okay, let him take a side of startup, how to start the startup. Okay. So then he told me, okay, to take the responsibility of how to come out of the issue if the startup, get into the issue. So it's not purely of a kind of an insolvency that what I'm planning to deliberate today. So it is all about if the startup gets into the financial steps, then what is the recourse available to the startup today? It's not a question of straight away going to the insolvency and liquidation. No question of that. Let's try to understand how the startup could come out from the financial stress issue, if at all, the startup faces, and how to come out and how to resume its business as a startup. I think Dr. Raju has already deliberated the provision relating to the startup and how it should be, what should be the recourse and how it should be done. All that he has taken through us. Of course, as you all aware that Startup Ministry of Corporate Affairs, while its notification dated 9th February 2019, you all aware of that, it introduced it. I just gave a brief about the whole thing, what Mr. Dr. Raju has discussed. I just want to share a brief about it before taking you to the part, reviving part of the start. Of course, I'm given a responsibility of to deliberate more on reviving side of the startup, but I just quickly wrap up the starting stage of the startup. Then I'll go to the reviving stage of the startup. As you all know that the government has introduced by notification 19 February 2019. It's like a peculiar thing that we need to understand. See, generally, if you see that Ministry of Corporate Commerce and Industry generally won't be issuing any notification. Generally, the Ministry of Corporate Affairs will be issuing notification. Here, it is kind of an hybrid kind of a control that the government would like to have. Okay, where I have to say that both Ministry of Commerce and Industry as well as Ministry of Corporate Affairs, both together will they are trying to see that what best could be done to the startup and what the provisions that could be introduced in our country to make sure that startup is really performing well and coming out with the result of what it is meant for. Okay, so that's the reason the circular, what are the notification dated 19 February that was introduced by gazette notification 34 of Gazette notification came out, wherein it is clearly stated that it will be entity shall be considered as a startup up to a period of 10 years. That's very important. So beyond that period, it won't be considered as a startup. Same way, the registered partnership, as Dr. Raju was deliberating, company and partnership and LLP. These three entity would be deemed, would qualify to be a startup. Same way, if the turnover should not exceed more than 100 crores. That is another criteria where we have to look it up to the startup to retain its status as a startup. And also the entity should work towards the innovation. Very importantly, we need to understand. Because Dr. Raju was referring many business and other criteria. The language, what exactly it is used is that the entity should work towards innovation, development, or improvement of products and processes and services. Or if it is scalable business model with high potential of the employment generation. Or this is the fundamental object and aim where this entire startup. That's why the entire thing has been taken up in the hands of Ministry of Corporate Commerce and Industry also to come out with a notification to say what are the conditions that a startup should comply with to make sure or to qualify itself as a startup. Because I know that the company could be incorporated into the Provision of Companies Act, the partnership could be formed, by virtue of the Provision of Partnership Act. LLP could be formed by virtue of the LLP Act 2009. So, but irrespective of the entity which is getting formed in a different enactment, but all getting regulated or it has to pass the test, okay, of the notification, the criteria that has been specified in the notification dated 19 February 2019 to see that it is qualifying as a startup. Of course, it makes sure that there's a separate board of which is called the Interministerial Board of Certification, comprising the members of the Department of Promotion of Industry and Joint Secretary of that department and representative of the Department of Biotechnology and representative of Defense Science and Technology. So that means that's why I told it's a kind of a hybrid which the government wanted to see that the ministry is involving, the competent ministries are involving to make sure entire thing is taken care of. Same way, if you see the recognition, the process of recognition has been explained to you already that there's an online application where or a mobile application could be done, and the application should be accompanied by the certificate of incorporation and write up as to highlighting how it is working towards the innovation development. So it is a responsibility of the entity to make sure that they are satisfying the highlighting how it is working, going to work towards the innovation. So after they are satisfying the object of employment generation and wealth creation, it will be taken up for the consideration. In fact, the DPIIT will call for further documentation to make sure before giving the whatever the exemption that has to be given. Okay, before going into the revival side, let me also take you through the exemption, the benefits that startup is getting it. That's very important to understand. What are the benefits a startup is getting it? Because once we go into the revival stage, we'll be in the last part of the entire thing. So before that, let's try to understand. Dr. Raju explained about the income tax aspects. He explained very nicely about what are the exemptions that the income tax is giving, for the startup. So I want to take you to the Companies Act. But as you all know that Income Tax Act, there are various sections the benefits are given. Section 80 IAC of the Income Tax, Section 54E of the Income Tax Act, and Section 79 also gives a benefit under the Income Tax Act. Even Section 56(2), 7B, and 115 JB, MAT, as you all are. These are the income tax exemptions that a startup is getting. But what are the benefits that under Companies Act the startup is getting? All the more is important because if it is incorporated in a company, then what kind of the benefits it's getting? So very importantly, if you see, I have to say that the Companies Act, the startup entity need not to enclose just like a small company need not to attach the cash flow statement. That's very important exemption that is given to the startup. What the next one? What is that? Section 73, which provides for prohibition of acceptance of deposits. So MCA-wide notification dated June 13, 2019 has exempted the startup to avail the limitless loan from its members up to 5 years of the data. So for other companies, normal general private company, there are restrictions on that. Different provisions are involved and how much a private company can take from its members and what should be taken from members and what is the limit as to what is the compliance. All is very specifically provided in the provisions of section 73, 74 and 75. Whereas with regard to the startup, the government has very clearly came out, the MCA wide notification 13 June 2019 very clearly came out exempting the startup that it can get a limitless loan from members. So completely opened up for the startup to take any level of any limit of the loan from the members. It's a very important benefit a startup can get. Under section 73, it's completely opened up. Similarly, what these one-person company and small company, what the benefit they are getting under section 92 in terms of annual return, signing of annual return. Here also the annual return can be signed by the company secretary, otherwise there's no company secretary, it's a bad director. So that means the rigorous of the compliance of Companies Act, certain things have been diluted with respect to the startup. Same way if you see section 173 5 of the Companies Act, where the meeting of board for other companies, you all know that there should be a minimum board meeting should be held in a year. Whereas in case of the startup, it is sufficient that there's a at least one meeting held, for every 6 months in a calendar year, and gap between two meetings is not less than the 90 days. So these are the exemptions which you really feel that what are the exemptions that are given to the small companies and one-person companies. These are the exemptions generally be given to those companies or extended to the startup companies also. In fact, if you see the more exemption, a promoter or director or any person who are belonging to the group, suppose they holds more than 10% of the outstanding equity of company up to 10 years from the date of may be allotted with employee stock option scheme. So that exemption also is given to the startup. Same way, if we see a startup company, it may issue short equity shares not exceeding 50% of its paid capital up to 10 years from date of incorporation. As you all know, a company can be startup only up to 10 years. So the benefits on the companies are given that a startup may issue a short equity not exceeding 50% of paid capital up to 10 years from date of its incorporation institution. Of course, earlier this benefits was restricted to 5 years. Now that benefit is given up to 10 years. And also I was saying that a private company which is a startup is not required to follow the limit, which I already deliberated to you. Same if you see that whoever a startup, they need not to comply the provisions of the Action Department given in the A to E of section 73. If you see section 73 A to E, it gives a different requirement for a company to invite deposits. In fact, all these deposits, provisions of section 73 will not be applicable for the period of 5 years from date of incorporation. That means the startup, they need not to comply the provisions of section 73, and the provision relating to the deposit is exempted to some extent, whatever is specifically stated and stated to have been exempted to the startup. So these are the real benefit that a startup has got under the provisions of Companies Act. Of course, not only under the provisions of Companies Act, you see other enactment, environment laws and the labor law, it is simplified. Actually, the complaints have been much simplified comparing to the non-startup companies. There, even in the environment law and labor law, if you see that the self-certification compliance and all is being introduced. It is not, which is not the case for other companies. But in case of startup company, the self-certification method also has been introduced. And also, if you see that the online registration is possible, therefore, the entity, the entrepreneur need not to break their head to see that they are struggling a lot. So, if you see the benefits side, so these are the real benefits where I was explaining under Companies Act as well as under the Income Tax Act also. Of course, it has got lot of benefits on the finance side also. There are so many loans also has been, though the startup is entitled. Of course, we need to have a separate session to explain about what are the benefits they are getting under the Income Tax Act and the Companies Act, in much to discuss much in detail, and also in the financial side. So these are the benefits side which I have to deliberate on. I want you to understand on the startup side. Now coming to the revival side. So suppose a startup, okay, after doing the business, they got into the problem, financial stress, where we call it. So they are getting into the insolvency stage. So then what is the recourse available? So because all the more, if you see that we were discussing startup, before a concept called pre-pack insolvency, which is there now in force actually. In fact, it become a talk of the country also, that a pre-pack insolvency provision has been introduced earlier, as you all aware that after introduction of Insolvency Bankruptcy Code 2016, with effect from 1st December 2016. The startup entity were not really getting the attention of the regulators, or the government, or was not giving focus on startup and MSE category at the time when the Insolvency Bankruptcy Code provisions have been introduced. But later the government realized that more particularly the MSME and startup, particularly the provision has been pulled the attention of the government when the limit of 1 lakh has got increased to 1 crore to initiate the insolvency proceeding. Then only the government thought there should be a revival mechanism should be incorporated to make sure the startup also is revived in case the startup get into the financial stress. It should not be end of the life for the startup. They should also be given a revival. So what the government has done, if you see, the government has took an initiative. President of India has promulgated the Insolvency Bankruptcy Code Amendment Ordinance 2021, which added a chapter 3A to the Insolvency Bankruptcy Code, which introduced the framework for the pre-packed insolvency resolution process, specifically for the corporate debtors, qualifying as a micro, small, medium enterprises. Of course, we'll see what are the threshold of the all that. In fact, most of the startup will fall within this category. Okay. Under Section 7 of the Micro, Small, Medium Enterprises Development Act 2006. Okay. Now, if you see, Ministry of Corporate Affairs and IBBA has issued a separate rule also, Insolvency Bankruptcy Pre-packed the Insolvency Resolution Process Rule 2021. Same way, IBBA also has released IBBA Pre-packed Insolvency Regulation 2021, which has have come into force with effect from April 9, 2021. Later on, and August 11, 2021, the amendment after having been passed by Parliament, because earlier it came by the ordinance. So after that, that ordinance has been approved Parliament as an amendment act with effect from August 11, 2021. So as you all know that MSME is really a critical, means MSME, what I refer is nothing but startup and MSME, whatever. In the context of revival, I'm talking as MSME, but what I'm trying to mean is a startup only. See, if you see the startup or MSME categories, they are critical for Indian economy. In fact, it significantly contributing to India's GDP, and that too employment to a sizable population. That we have to really appreciate that the startup and MSME is really giving, more particularly MSME is really giving a good job opportunity and contributing to India's GDP. Of course, the startup is picking up. Soon we can see that the startup also will really grow much in a economy, and as equivalent to the MSME. Okay. Now, what is the recourse is available? Okay. What is the recourse available? Yeah. Tell me.
Sir, actually, when you were telling about these PPIRP, I actually, especially with respect to these MSMEs and startup, there is like a normal widespread talk relating to some informal discussion with the creditors. So not actually going on with the corporate insolvency resolution process. So before approval, so what exactly is this PPIRP, and like how I can differentiate it from this CIRP, means the corporate insolvency resolution process, or is it both the same? I always have the doubt relating to this.
Wonderful question. And actually, this is the only important thing which we need to understand, because after Insolvency Bankruptcy Code 2016, we are all familiar with CIRP, Corporate Insolvency Resolution Process. Whereas in 2021 only, as I was referring, 2021 only it came into effect from August. The PPRP, where we call Pre-Packed Insolvency Resolution. How it differs from CIRP? CIRP, as I was referring, that CIRP can be triggered only when there is a default of more than 1 crore and above, which of course you all aware that because of this COVID, the threshold has got increased from 1 lakh to 1 crore. So that's why the government thought that okay, the government should also give a relief to a small sector called namely the MSME or startup, and see that how the initiative, because before getting into the resolution process, as you rightly said, informal way. It's not informal way. The law is very clearly written. Section 54 till 54P, Class P, as clearly spelling out what are the process to be followed, and rather we can't call it as an informal at all, because everything is written in the code. So it clearly spelling out what are the things to be done before getting into the process of PPIRP, means a pre-packed insolvency process. Therefore, it is as equivalent to understand, like any other law, that how the pre-packed insolvency process, PPIRP, could be initiated and how it should be initiated, where it triggers. So all is very important to understand. If you have to say very directly that what is PPIRP, it's nothing but as a manner of a resolution of a corporate person, because it includes a company as well as LLP. When a resolution plan is formulated by the management of the CD, very, very importantly, this is the big difference that we can see comparing to CRP. CRP also, the management is permitted to formulate a resolution plan subject to the provision of Section 29A, which is a strict bar the defaulting management who has been a defaulter list, whose name appears in the default list. So, but where if you see PPIRP here, management themselves is given a free hand to formulate a resolution plan for the revival of the corporate data in consonance with the creditors while retaining the control over the management and operations. Here, very importantly, the big difference is the question that you have raised, that what is the CRP. The CRP management goes out of hand of the management. CRP. Whereas in case of PPIRP, the management, it continues with the management only, means the company CD only. So the management is not going in the hands of the erstwhile management to the RP or liquidator, the IRP, where we see the PRP proceedings. It is not going to the hands of professional. It will be continuing even after formulating the resolution plan. It will be very much continuing with the management of the corporate data. Means over the management, the present management of the corporate data, even after formulating the resolution plan, that continue to be in the management of the company. That's a real difference we have to see. And if you have to see other differences, PRP is a quick, it's a cost-effective process than CERP, and particularly it is designed to serve a MSME sector. Actually speaking, as I was referring, that it's really considered as an important engine for the economic growth, and which promotes the equitable development also. So that's why government is taking initiative that, and in fact, PRP guarantees the continuity of the business by adopting the debtor in possession model. That's very important, because if you see CRP, it's a creditor in possession. If you have to understand the real difference between the PPRP and the regular CERP, in regular CERP, corporate insolvency resolution process, it is a creditor in possession. That's why the IRP and RP is under supervision of the Committee of Creditors, COC we call it. Under supervision guidance of the COC only, the interim resolution professional, and the resolution professional will conduct the affairs of the corporate data as a going concern in compliance with the provisions of the Insolvency Bankruptcy Code. Whereas in PPRP, things are different, where the continuity of the business by adopting the data and possession model, comparing to the CRP, where board of the CD is suspended. In case of CRP, the board of directors of the corporate data is suspended. Whereas in PPRP, the board is not suspended, the management is not suspended. The management will be with the same hands of the board, and board will continue to do what they were doing before the commencement of the PPRP. Same they will be doing, of course, with the what I have to say, with the supervision of the RP, because RP will be part of the board member, and with the supervision of the RP, they will be the management will continue to do the same thing. Hope the question which you raised, ma'am.
Yeah. Same thing, sir. No, lastly, you were mentioning about the resolution professional RP, right, sir, with respect to this PPIRP process. So whenever there is a pendency with respect to this PPIRP, what exactly is the role and the powers of this resolution professional other than
Yes, madam. In fact, role and power of the resolution professional is wide in this. In fact, I have to say that I could rather say the role of the resolution professional is much more wider. Not I can say much more wider, I think it is very narrow, because they are given a very specific responsibility as a resolution professional. In fact, if you have to see the role of resolution professional after the nomination is approved, because the nomination has to be approved. The CD who is initiating the process of taking approval of financial creditors, means whoever the unrelated financial creditor, which the court says. Okay, after it is approved, the nomination gets approved. But before filing the application before the adjudicating authority, if you see, the main role of RP is to prepare a report on the CD. That's the main role of the RP. In fact, beyond that, apart from that, what is that the report talks about? If you have to see the report talks about confirming the complaints with regard to the eligibility criteria, whatever required to be complied by. That is one thing. And also the stating the completion of the action taken. Okay, whatever we'll be deliberating in that also should be the part of that. And what are the reports and information as per the BBA they have to give, that also has to be given. That becomes the main role. You have to see more than role, I have to see power. What are the power they are having beyond the role? Because role, if you have to see, is different. What are the power that they have, that one should understand. Role, you have to see that during the pendency of the PPRP, the RP must carry out the powers, means role of monitoring the management of CD, which I was referring, that the management stays in the same hands after starting the process of the PPRP. Not like the case where after initiation of CARP, the management goes in the RP or IRP. But here, the management stays in the same hand. But of course, it is the role, the responsibility given in the hands of the RP to monitor the management of the CD and inform the COC of in case of any breach by the board of directors. That means the RP will be a representative of the COC and sitting in the board meeting, and and make sure that he is informing to the COC in case of any breach done by the board of directors. So, very important role is given to the RP. And apart from that, the RP has also given a role of preparation of an information memorandum based on the preliminary information memorandum prepared by the CD. Here, little differently here, when CRP, the RP, IRP is given the responsibility of the preparation of information memorandum, IRP and RP. Here, little differently, the CD has to prepare a preliminary information memorandum. Actually, there are two things here: information memorandum, preliminary information. Preliminary information memorandum has to be prepared by the CD itself while they are contemplating a revival process of PPIRP. Whereas based on that preliminary information memorandum, it becomes a duty and role of the RP to prepare an information memorandum based on the preliminary information memorandum. So if you see what are the powers of the RP during the financial PPR, it is very important to understand. Though he will be sitting as a monitoring agency or a monitoring officer in the board of directors meeting, but he has got a power to access the books of accounts of CD. So it's not that simply he'll be sitting in the board of directors and he'll be monitoring board of directors and reporting to the COC in case of any breach done by the board members, ex-promoters. No, it is not the only responsibility given to the resolution professional during the pendency of the PPR. In fact, the important power that RPA has got is to have access to the books of accounts. So RPA is given access, powers to access the books of accounts of the CD. Anytime you can go and access the powers of the books of accounts, and also to access the records of the information utility. It's another very important power that RPA is having. And not with that, as I was referring, he has to attend a board meeting. He has got a power to attend a board meeting and also the shareholders meeting and COC meeting to make sure that everything going in tandem with the provisions of the insolvency code and also the guideline or benchmark given by the COC. And also to appoint the accountant, legal and other professionals, and to collect the information regarding the asset or finances or business to determine the financial position, and also see the existence of the avoidance transaction. And not only with that, and also to access the data from the financial institution where the accounts of the CD is maintained. And also, if you see, the real authority given is the person, whoever the employees or officers, personnel of the corporate debtor and is promoter or any other person associated with the management of that, they should extend all assistance. The equivalent provision which is there, section 19 of the Insolvency Bankruptcy Code, that gives to authority, means it makes a mandate to the promoters to give a cooperation to the IRP and RP during the management affairs of the corporate debtor during the CRP. Similar provision has been included in the PPRP also, wherein the person of CD and promoter and any person associated with the management of CD should extend all assistance and cooperation to the RP as may be required by the RP to perform his duty and his purpose. So these are the main thing. Apart from that, of course, there are other roles and responsibility also given where the COC decides with the 66% of voting right, the entire management will be shifted in the hands of the RP. That is very important. Then the RP will have much more responsibility, just like a CRP. This is the position of the real role of RP comparing to CRP in PARP.
I think there's a wide range of duties, like starting from monitoring, supervising, even identifying the breaches and reporting.
Yes.
So for one question that it strikes is like, when you said the roles and powers of the RP, like who is actually responsible to file or initiate the PPRIP? And like, can we say that the board of directors can be divested of this management of corporate debtors? Who exactly is responsible for that?
See, ma'am, if you see the initiation, first of all, as I was referring that, it should be first MSME. In fact, you all know that MSME, what is the, I think maybe for the benefit of few who may not be having idea, if you have to see manufacturing and services investment which does not exceed 1 crore and turnover does not exceed 5 crores will be deemed as micro. Same way, the investment which does not exceed 10 crores and turnover does not exceed 50 crores will be deemed as a small. Same way, investment does not exceed 50 crores and turnover does not exceed 250 crores, which will be deemed as a medium. This is the criteria to make sure that it is falling within the portfolio of domain of the MSME. Okay, first, before proceeding to initiating of application, one should make sure, the corporate person has to make sure, are they falling within the parameter of the MSME and are they registered with the MSME as MSME, so that to fall within the domain of PPRP means get authority and rights to initiate. Who can file if you can application if you see to initiate PRP? It is nothing but a company, the management in case of LLP, the LLP, who is classified as an MSME under section 7(1) of the MSME Act 2003. They have the power and authority and obligation to file an application to initiate the process. So when it can be initiated, if you have to see, we should understand that minimum default threshold specified is 10 lakhs. Of course, the central government is given a free hand to increase the 10 lakh up to 1 crore. So it can be increased, but as of now, it is only a 10 lakh. The minimum default should be 10 lakhs. Who can initiate is the management of the corporate debtor themselves has to initiate. It is not like in any other case where in a general normal CARP, it will be initiated by the creditor under section 7, 9, 10. Then of course by the corporate debtor on its own under section 7 by financial creditor, under section 9 by operation creditor. But here it is completely different. Here it is not by creditor. Here that's the very real advantage. Here the MSME, the startup or MSME, whatever we call it, the management of that entity is given a free hand to initiate, so that they are given an opportunity, though it is very specifically said what it should be done, what are the parameters to be followed, what should be informed. But as you said that before going formally before the adjudicating authority, there's an informal way of approaching before going to the adjudicating authority, and rather we can say not informal, formal way of approaching the financial creditors. Okay, before going into the adjudicating authority, formal way to approach the financial creditor and take their concurrence in terms of vote of 66%, and preparing a base plan and filing before, giving a copy of the before RP and making him to present before COC. This is how the entire process starts. In fact, if you see default under section 3 subsection 12 of the code, if you see non-payment of debt, when whole or any part of the installment of the amount of debt has become due or payable, not paid, paid with a debtor or CD. So here, as I was referring that, it is 10 lakh. So what, before proceeding it, what should be the eligibility criteria? That one should really see that the corporate debtor, the management, before proceeding further, they should make sure that are they eligible to kickstart the process, filing of PRP application. For that, they have to see that they have not undergone PRP during preceding 3 years. That is number one. The next condition, what they have to see, that the corporate, the CD has not undergone CER. That's another condition they have to see. Then again, if you have to see that there should not be any liquidation order has been passed against the CD under section 33. Then if this is the scenario, then they cannot go under PRP. So they should be free. And also, it should be eligible to submit a research plan under 29A. So if you have to say what are the, who has to do and what are the prerequisites to make application before PPR, before making a application for PPRP before adjudicating authority. As I was referring that the default amount should be 10 lakh. That is number one. Then approval of member by way of a special resolution should be taken in the general meeting by the company which is approaching. If it is a LLP, it is like a 2/3 of the approval of partners. In case of company, it is a special resolution in general meeting. And if you see the prerequisites is a formulation of base resolution plan. Then again, if you have to see the next requirement is that approval of unrelated financial creditor, which I was referring earlier, by calling a meeting of a financial creditor where the quorum of not less than 1/3 should be there. So approval in terms of 66% of voting of the unrelated financial creditor is important to initiate the process, the formal process of approaching the financial creditor before approaching to the rather I don't want to use the informal. It is a formal process because the law, the code very clearly makes it under section 54. What is the formal process to be followed before going formally before the adjudicating authority? So this is the formal process where they have to take approval of 66% of voting approval from unrelated FC. Same way special resolution passed by the members of the company by means of special resolution. Same way the application filed before by the AA before the adjudicating authority for initiation of the. In fact, very importantly, we have to see resolution or more than 3/4 of the partners must pass the resolution approving the filing application, initiating the PPRP. That is very important thing. Second thing, they have to prepare a base of solution plan. Third, a director has to give a declaration that the application would be filed within 90 days. And also, they have to give a declaration stating that this pre-packed insolvency resolution process is not being initiated to defraud any entity. Otherwise, if subsequently they come to know, court come to know that the PPRB initiated to defraud, then there's a separate penal provision specified. Same way, the third criteria is that particulars of the resolution provision has to be mentioned in the application. And as I was referring, 66% of approval of the COCs means the financial unrelated financial data is a pre-requirement. These are pre-requirements.
There are like different pre-requirements, I can say, before filing a application. And also, like there are certain things which has to be kept in mind before we file it with the adjudicating authority. Now, sir, this is one thing. Like, what is the form of application, or what is the documents that will be required for filing with the AA?
In fact, yes. In fact, the big list. The list goes on. How to say that? What are the list of documents has to be filed for initiating? In fact, if you have to say before going to the list of document, I want to say the timeline. This is very important timeline before going into the list of document. The timeline, if you have to see, the PPRP must be completed within the period of 120 days from initiation of insolvency commencement date. So 120 days is very important thing. Then the admission or rejection by the jurisdiction NCLT within 14 days of filing the PPRP. That is another thing that one has to keep it in mind. Same way, the corporate debtor, they have to submit a claims along with the details and preliminary information memorandum containing the information relevant for formulating the resolution plan within 2 days of the insolvency commencement date, which we have to be very careful in seeing the timeline. Same way, corporate debtor, they have to submit a base resolution plan either individually or jointly, because section 54K it provides for within 2 days of commencement of insolvency commencement date, as per section 54. And the same way, constitution of COC has to be done within 7 days of the insolvency commencement, as per section 54, subsection I. Same way, if you see, first meeting of the COC has to be conducted within 7 days of its constitution, as per section 54L. If no resolution plan is approved by COC within 90 days, then RP to file an application for termination. So these are the basic requirement that if you have to see what are the things to be signed. If you have to ask me how it has to be filed, because in fact there's a detailed document specified. What are the documents that one has to see? As I was referring that before proceeding filing of document, before proceeding the filing of application, and it has got a list of attachments that the application has to be, and what are the requirements, pre-requirements. I was referring that pre-requirements, what are the things. In fact, if you have to see the application form, in form 1 has to be filed with the A, as all we all aware of that. That application form, before filing it, a copy of the application form has to be served to the IBBA before filing the application form. In fact, the acknowledgement of whatever the copy served with the IBBA has to be attached along with the application form which is filed with the AA. So if you have to come to the document which has to be filed along with that, form 1 in the rules it prescribes what are the documents should be attached with. It says that the RP report has to be attached with, and the written consent of the insolvency professional has to be attached with, a declaration regarding that there is no avoidance transaction under chapter 3 of the code, or the fraudulent and wrongful trading was not there under chapter 3, and all this detail has to be attached. Information pertaining to the books of accounts has to be attached along with the application. Of course, very importantly, fee of 15,000 is very important along with the documents when we are attaching the filing in the application. Of course, if you have to see, the list of creditor in form number P2 has to be given, copy of declaration as I was referring, the copy of special resolution which is passed, and also the base resolution has to be given. These are the basic things that before proceeding to file with the before the adjudicating authority, the list of creditor in form number P2 and copy of declaration in form number P6 has to be given, and special resolution and base resolution. These are the important things that need to be attached.
It's a huge list of documents from what you said, sir. And sir, you were mentioning about the corporate insolvency resolution process, and you also discussed how it is different from the PPIRP. Now, a question is like, what happens if both these applications are simultaneously filed? The simultaneous application for PPIRP as well as the corporate insolvency resolution process. Is it possible, first of all?
Yeah, madam. See, more than possible. If the situation happens, what to do? The question is that. Actually, whether it's possible or not, that's very difficult to keep track it. So, filing of application and the CRP, it may happen in one time, and filing of application and the PPRP may happen at different time. So, more than seeing that whether it is possible or not, what is the legal position? If suppose simultaneously application is filed both for CRP and for PPRP, that's very important to understand. Okay, so if you have to see the scenario, we can segregate scenario like this. Suppose, so application of CRP is pending, is filed during pendency of PRP. Okay, so admission of rejection of PPRP would be considered before the application of CRP, when application CRP filed during pendency of the PRP. So it's, and the scenario again, if you see application of CRP is pending and application of PRP is filed within the succeeding 14 days, very importantly. So admission rejection of CRP application would be considered before PRP is there. So if you see application of PRP has been filed after expiry of 14 days from date of the filing of CRP. You see, an application to initiate a CRP under section 7 or 9, if it is already filed, then the application which is filed PPRP will be taken in hand. In fact, more than this, if you have to see when it will cease, the application when it will cease, and the scenario is that comparing to CRP, PPRP, I told, but the scenario when the PRP role will cease, the RP role will cease. Okay, if you have to see that if CD fails to file an application initiating PRP within the timeline, then it ceases. And if the application for initiating PRP is admitted or rejected, then also the PRP process of PRP will be ceasing. Okay, so that means, so what happens if it is PRP is filed when CRP in progress and CRP, both the can be filed, but when it is filed, only decides which survives, which does not survive. That's very important to understand. The 14 days time is very important before or after.
This is only when we have the simultaneous applications for CIRP and PPIRP, or generally is there any?
This is a scenario only when both the thing is pending. Otherwise, if there's application independently, suppose there is no CRP, then PRP will be taken in hand. If there is no PRP, CRP will be taken in hand. If the both application lies before the presented before the adjudicating authority, only the question comes whether it is before 14 days or after 14 days, and when it is filed. At the time of filing, what is pending? Only that scenario the question is coming.
So when it should be completed, sir, the entire process of PPIRP? What is the timeline?
Maximum timeline is 120 days. That's the timeline. I was explaining the timeline, before some time back also. The maximum timeline is that should be completed 120 days from the insolvency commencement date. And other timeline which I was saying that the adjudicating is the same way, you have to take decision within 14 days time after filing an application. And the constitution of COC as I was talking within 7 days time from the commencement date. Same way, first meeting of COC is within 7 days after the constitution of committee. So every timeline is very specifically is given. in fact, if no resolution plan is approved by COC within 90 days of after ICD, after commencement, then RB has to file application for termination. It is purely time driven, completely time driven.
Anyway, sir, I think there were lots of questions that you had to answer. So thank you for addressing all these questions very patiently. I think if you have to add any more points, and before we go on to the viewers, if they have any questions before we wind up the session, we can address. So any questions from the attendees?
Madam, the questions are there in the
Q&A.
box.
Yeah.
Maybe you can take one by one. You can click the Q&A and then you can take it. And maybe we'll also request the participants, if you have any queries, you can type in Q&A box.
Yeah. And so one of the viewers have actually asked for whether you could cover the benefit of convertible note from foreign equity contribution. Is it relevant in this particular session or?
Yeah. See, I think I was referring about convertible note. I think I was referring about local this thing. In case of startup receives an amount of 25 lakhs or more by way of convertible note, which is convertible into equity shares within a period of not exceeding 5 years, it is possible. The same question probably is coming up whether foreign company. In fact, we don't. It has to go by the provisions of FEMA more than the provisions of Companies Act. We need to understand the provisions of FEMA, because what the Companies Act permits is that the startup company can receive an amount of 25 lakhs, okay, by way of convertible note, which is convertible into equity share within a period of exceeding. Whether it is permitted under FEMA, then the FEMA, I think this particular point under FEMA is yet to be looked up. I don't think now it is opened up. Probably Raju, if you can have Dr. Raju can share your views. As of now, with regard to convertible note, FEMA has not came out with anything as of now, to my knowledge.
I agree.
And for Gopalakrishna Raju sir, this is regarding the registration. For registration of the qualifying condition, entity is working towards innovation, development, or improvement of products or services, or if it is a scalable business model with a high potential of employment generation or wealth creation is being considered. So I am not sure whether it is actually the member is asking as a clarification or he's just putting.
No, it is continuing in the next. It continues the next one.
Plus institution friendly, but for the 80 IAC benefit, granting same support is in need of startup, which in fact is lacking. I think he has just put forward his views on whatever is the topic that has been taken forward. And there is one more question relating to LLP. Can an existing LLP be registered for these benefits as it wishes to change its total business or add a new line of business, provided the new idea or line is technical improvement or new technology or import substitute?
I will first answer that previous question, madam. That 80 IAC benefit support is in fact lacking. That is a question Mr. Shankaramurthy's question is. Actually, out of 69,636 startups recognized till today, out of that only 441 income tax exemptions have been given, not even 1,000. So that means it's a very low number. So what is the reason? Number one, the application for getting 80 IAC, they have to comply with the norms properly. For example, the immediately 80 IAC doesn't give you a by default exemption. It is an option given, so that option has to be exercised. And when I have to exercise that particular option, this certificate is mandatory, and without that certificate, I will not be eligible. Now, when I have to apply for the certificate, I need to be in existence for some time. So many, to my understanding, what people they apply for 80 IAC is they get the recognition and immediately they apply for 80 IAC. So this doesn't show maturity. Yeah, at least 1 year of standing. So maybe 6 months or 1 year of standing. If they prove themselves that I am a startup company, I need the exemption. So there is a general perception that a plain vanilla situation is maybe in second year or third year only they may start making good revenue and the profits will be there. So if it is a genuine startup, maybe exceptional circumstances in year one itself they can make profits. So that is the place where they have to prove the genuinity about that particular transaction. So year one itself, I start doing it. The question mark will come. So I get the recognition immediately. I apply for exemption. So this mistake, many they do, and I will not say it is a mistake of the entrepreneurs. The consultants, they actually will give too much of what do you say, confidence or the promises. No, 80 IAC gives you exemption. We'll get the recognition, we'll get the exemption also. No, let the recognition be first, and that recognition will give what are all the other benefits for recognition. The labor law compliance need not be done. Labor law compliance is not required. That is the purpose of having that recognition. Number two, there are innumerable state government schemes. For example, you can go to startuptn.in. Every state government, they have a startup website. There is a startup and innovation policy of Tamil Nadu government from 2018 to 2023. Every 5 years they have brought. This is the first 5-year policy they have brought. Innovation policy. There are a lot of subsidies given. The funding proposals are there. SIDBI is funding. Seed funding is available. So many benefits are there. So are we a genuine startup to actually explore all this ecosystem? And there are startup academies are there, and startup you have to showcase getting who are the best startup in the country. So all these participation will show that I am a genuine startup. So that is the reason Mr. Shankaramurthy's point is valid. There are not hundreds, thousands of 441 only have been granted IDIC, but thousands of applications are rejected. Reason is only one: the genuinity is not.
I think Sir has also added this point, like as per the recent statistics, I think very few, as you said, has availed the 80 IAC benefit. Is there anything that can be taken up by the chamber to be liberal in such approval? I think Suresh Sir will have to answer.
Yeah. So this, I think, we will reserve the question to our President, Hindustan Chamber, CAK Suresh.
Okay. So I think with that, I think almost all the questions have been answered. I think it's almost over. I don't think there are any questions that is coming from the attendees. So I think with this, we'll wind up the session, sir.
I think Mr. Suresh will be President will be taking up whatever the queries are raised, or whatever the benefits that can be furthermore can be given to the this sector, particularly the startup sector. I think as a chamber, surely, in fact, we are also part, myself and Dr. Raju also part of the chamber. It's not that the President has to take initiative. In fact, on our own, we will prepare some note and give to the President to make sure that some more benefits also is extended to motivate the startup. Because I think startup, I think Dr. Raju will endorse my point. Startup is still to take up a lot in numbers. Though it is there, I think because of the present compliance conditions, situations, and it has to pass number of tests. Okay, because of that reason, probably the startup coming out with a startup, people are struggling properly. Same way, the benefits also is given. I hope that Dr. Raju will.
We will also hear from one or two participants their view also. May I request Mr. S. Selvaraj to kindly unmute and share your thoughts, please. Mr. S. Selvaraj, I have just unmuted you. And we'll also have Shankar Murthy. I will unmute Mr. Shankar Murthy also. So, Selvaraj sir, very good evening, sir. You can go ahead to share your feedback. Yes, sir. Please go ahead, sir.
Sir, what exactly you want from me, sir? Some disturbances. So
No. Your feedback about today's
yes,
session.
at
Mr.
least
Before you share your views, sir, Mr. Selvaraj is a very senior chartered accountant from Madurai, from Tamil Valartha Madurai city. Mr. Selvaraj is there. So let us hear from Mr. Selvaraj his reflections about today's program.
sir,
And
both your session and Mr. Dhanapal's session gave an overall view of the startup. You clearly charted out what is the eligibility. He also clearly told about the IBC in comparison with the PIRP. So it is a very useful session. Anybody who did not understand the startup, if you heard this session, definitely they will have a good idea about the startup. Very good session, sir.
thank you, sir. Thank you, Mr. Selvaraj. Now let us hear from Mr. Mr. Muthu Manigandan. Mr. Muthu Manigandan, you can speak. Mr. Rajendra Prasad Reddy. Mr. Rajendra Prasad Reddy also, you have raised your hand. I have unmuted. We'll also hear from Mr. Shankara Murthy, Mr. Sriram Bhashyam. I have just Sriram Bhashyam. We'll also hear from MD Sujata. Sujata MD, I have unmuted. And yes, Ms. Sujata, yes, you can speak now. You can unmute your mic and then share your thoughts. And we'll also hear from Jayashree Parthasarathi. Yes, Mr. Muthu Manigandan, please go ahead. You can speak now. Muthu Manigandan. Okay, we'll hear from Sujata. You can unmute and share your thoughts, please. Good evening. Good evening, Sujata, madam. Please go ahead. You can speak now. Mr. Muthu Manigandan, are you there? You can speak. Oh, we have Mr. Riazuddin. Riaz bhai, very good evening. I have just unmuted. Wish to hear your feedback also. Yes, Mr. Sriram Bhashyam, you are now live. You can speak now. Good evening.
Sir, I think Muthu Manigandan sir is having some issue with the mic. So maybe.
Okay, maybe. So anybody else who wish to share your thoughts? Okay, then we will thank the moderator, CA Rekha Umashiv, the Honorable Regional Council Member of ICI Southern Region, on behalf of Hindustan Chamber of Commerce, on my personal behalf, and also on behalf of the Chairman of Corporate Law, CS Dr. S. Dhanapal. Anything else, Dr. Dhanapal, you wish to add?
No, Dr. Aji, in fact, I personally wanted to check one point with you. See, with respect to income tax, if you see the taxability and the other things, before closing, I thought I can put the question. It may be useful to participants. With respect to the income tax, is that, see, the tax benefits are given to entities in a different pattern. Means a company has got a different taxation, partnership has got a different taxation, and LLP, of course, partnership and LLP will go in tandem, if I'm not wrong. So, in case of these exemptions, what are given to the startup, will it have any difference? Because if you see, if it is the Companies Act, the company is formed under Companies Act, comes within the parameter of Companies Act, therefore there's a clarity comes. and the LLP, limited liability partnership, it is registered with the limited liability partnership, the clarity comes. Similar way, partnership also, there is a partnership act. Whereas in case of income tax act, all three entities are falling within same one enactment called income tax act. Will the benefits are one and the same are applicable in the same pattern, same percentage, or will it differ with respect to income tax?
No, it is same. For example, it will be more beneficial for partnership firm because partnership firm tax rate is 30%.
Exactly, I wanted to know.
And your private limited company tax rate is 25%. So actually, registered partnership firms, they should actually avail 80 IAC maybe in the first time. So they are more beneficial. And one more point, since you have brought this, the public limited companies cannot be a startup company.
Yeah, correct.
Section 8 company cannot be startup. It is only these three entities.
It's a private company and LLP and partnership.
Only three. Registered partnership.
Registered partnership.
Yes.
I don't know. Registration doesn't give. It is recognized for this purpose. It is recognized.
Yes.
So it is not mandatory. And
because when you upload the details in the portal for getting the recognition, that is fundamental. That is first criteria. Second, you have to give a write-up about your innovation, development of product process, etc.
I think this startup for government can extend to some more avenues or some more objects. Probably startup more numbers we can see. Today it will only restrict to innovation and some creative thing only. I think it can also be extended like how today our CSR is getting extended to more avenues. So I don't think whether government is having any thought process in this.
No. The idea is you have to have a unique, say, a successful model. For example, we have Murugan Italy Kadai. Murugan Italy shop is there. So myself and Dhanapal, we put money and we start another Italy shop called Dhanapal Italy shop. So will it be a startup? We start, but will it be a startup? No. That is not a startup. It is already a successful model. So we have to bring some innovation. For example, the same Italy shop, we want to bring an innovation with respect to delivery. We don't want to cater to walk-in customers. We'll only do a delivery. And we have a separate delivery model. We create an application. And the maximum time with respect to delivery is only 15 minutes. So hot idlis. It is not Murugan Italy Kadai. It is a hot Italy's shop. Like that, we make a name. And the uniqueness is within 10 minutes or 15 minutes, maximum of the delivery, it will be delivered. That means we need to have more hubs, so many places. I cannot have one place and do it. So that is where innovation comes. So innovation should be in terms of your business process somewhere. Then it will be recognized. Otherwise,
it need to be patented. Is it a mandatory that it has to be patented?
If you need a patent for it, there is the IP facilitation center is there. They will. This is only for startup recognized entities. You want to register this innovation process. Innovation. You want to register it as a separate patent in IP, intellectual property right. You want to register. It is possible. So they facilitate.
These are the questions I expected from participants actually. So that's
hello.
Yes, Mr. Muthu who is this?
Yes, sir. Am I audible?
Absolutely clear and loud.
Thank you. Finally, yeah. Sir, I already own a startup. It's a private limited, registered with DPIIT.
Can you please introduce yourself?
Sorry, my name is Muthu. I'm already part of Hindustan Chambers. I'm a mechanical engineer from SSN and I've done my master's with MBA from NTU Singapore. So my startup is basically into we are facilitating the rental payments. We are not a payment gateway. We are actually trying to solve the problems in rental payments. Today, if you see, for a lot of people who have more than one property, it becomes hard to track every month the payment is coming or not, it is coming in right time or not. And during COVID, if you saw, almost 3-4 months people didn't pay rent. So their maximum advance would be for 6 months. So if it is gone higher or not. One more problem which we solve is few tenants who don't vacate, and they are not giving rent also. As per the government law, 11 months a tenant doesn't pay rent. Then the government says that all his belongings can be attached and given to the owner. They can sell and collect money. That doesn't allow them to. It is not giving possession, but socially, if you see, when police comes to your house, confiscates all your item, and socially you don't like to live there. We have already vacated one person in Adyar. Was not giving rent for 1.5 years. He left this way. So these kind of items, and plus very importantly, what we are trying to give is credit to the tenant. Today, if you see, a lot of people.
And then we
Yes.
appreciate all this. Please stick on to your question.
Okay. So I am already a DPIIT registered startup. Yeah, thank you. One question was, this 3 years can be taken in within first 10 years, any 3 years, or how it works? Sir? Just, I'm sorry, I didn't attend the full session. I joined a little late.
When did you join?
I'm not sure of the timing. I guess during your Q&A or little early only I was able to join.
Okay. So when did you got your startup registration?
Almost 8 months before, sir.
Okay. So when are you expecting profits?
Last year we have done around 1.5 lakhs turnover. I guess we will do around 25,000 profit in that.
Okay. So you want
In this 8
exemption
months I'm talking.
20,000 or you want to pay tax on 25,000?
As a small amount, I thought I'll pay the tax.
Very good. We appreciate it. So please plan it accordingly. Please plan for the next 5 years and 10 years. And those years when you believe your business will soar high. So
Okay.
1 year before you plan for the exemption for consecutive 3 years. Best of luck.
So should I already I have DAPIIT that license. Should I apply somewhere again for this exemption, or how does it work, sir?
To that particular point, that is very important. You have to separately apply in form number 1 online.
Okay. Okay.
Then only you will get a certificate from Ministry of Commerce and Industry. So getting 80 IAC certificate is separate process.
Okay. Okay. One more question, sir. Sir, we have also applied for a grant. We are in the final stage under the MSME hackathon. MSME hackathon, sir.
Very good.
It's a central government. Yeah.
Central.
Central, sir.
Central government. Okay.
It's a 15 lakhs grant. Just wanted to understand, how do we account it?
You got it?
Not yet, sir. But we are in the final stage. We have been selected. It's 3 rounds. We are in the final round.
No, you are account. How do you account it? Means we don't understand your question.
No, because it's a grant. Should we? Because it's not taxable, is what I understand first. I'm not an accounts person. So what happens? How do we show it that this money which comes inside? It's not an income.
Now you have got this grant. There will be a condition attached to this grant. Government grants are not given free. You just ask, they will not give. There are conditions. You would have submitted various things. So
yes.
Only giving the last point. What happened at the beginning story you have not shared with us. So in the hackathon, you have demonstrated something, you have promised something, government is expecting something from you, and you would have entered into, you would have given a declaration to the government. So unless and otherwise you explain all those things, I'll be in a position to explain.
So, yes, sir. They're giving 15 lakhs, sir. They're saying whatever in the presentation we have presented to them, all those numbers has to be achieved. I mean, if you don't achieve also, they're saying that at least 10-15% lower is okay, plus or minus, but we have to work towards it. Is what is the condition they're having.
What will happen?
I haven't got any, because we are in the last stage. We have not got any exact terms and conditions.
You have to give an answer unitary, Muthu Manikandan. You are an entrepreneur, okay? Okay.
I understand, sir.
If you are not achieving that promise given to Government of India, what will happen to 15 lakhs?
So if the percentage is very less, like we have not done anything, then we have to repay it.
You have to
repay it.
Very good. You got the answer. So it is not a income for you. There is a condition attached to it. Okay.
No, what you're saying is right, but what I'm asking, because genuinely I want to use it. If I have used and I achieved that, then what happens?
Then you have to account it as a government grant with respect to the benefit what you have given to the society, and this government grant will be treated as an income in your profit and loss account over a period of the government grant. If it is a 5-year grant, over a period of 5 years, you have to amortize it and show it as an income.
So this is just for 1 year, sir. This grant is very specific for a year.
Then 1 year,
Then
itself, show it as an income.
1 year itself. Okay.
Muthu Manigandan, you have to, this high time, you have to engage a professional accountant, chartered accountant, or
Yes, sir.
a consultant, and keep in touch with him and get all this consultation with him for paid services. Thank you.
Sure,
very
sir.
much.
Sure. Thank you, sir. Thanks a lot.
No, just to supplement to Dr. Raju's, please understand this is not the investment made by the government. As he was referring that it carries the obligation. The subsidy, whatever the government, in fact, it is for you, the startup, the government has given, but in many of the proposals where we deal with the government gives like Tamil Nadu skill development and like that, government initiatives, government form company or government authorizes to form a company and they give a subsidy with the condition that, as you said, the numbers has to be achieved. Not even numbers, we have to call it as an object. The object of for what the company has been started or has been recognized. That's the correct word. So the object and purpose for what your company is recognized as a startup, that object aim has to be achieved. I think this subsidy, Dr. Raju said accounting side should be treated as an income and subsidized. I'm not getting into the accounting side, but it is not per se as an income earned by the company. Okay, it is not the income earned by the company, but as you, Dr. Raju, as he said, anyway, any item has to be brought in the P&L or balance sheet. Similar way, it has to be brought in, but there it is a condition attached to that, an obligation attached to that. It cannot be distributed as a profit. That is the first this thing should carry. So it's not like a regular income where it can be distributed as profit. It should not be distributed as a profit, and dividend should not be taken out. Hope Dr. Raju agrees my point.
Yeah.
No, I was thinking on the same lines, because if it becomes an income, then I have to pay GST. Then I have to ask government for the GST is what I was thinking of.
I don't think it is categorically has to be recognized as an income. How like any other income should be, it should be kept in a different footing as an income. I agree it has to be treated as income. There's no other way. But since it is coming as a repayment condition, I think Dr. Raju should be a contingent liability actually. Because if it is not going to be fulfilled, if it has to be returned as per the conditions of the subsidy, then it has to be shown as also liability side. Probably not as a reserve and surplus, it should come in the liability side. I hope you agree on that. It won't go in a reserve and surplus. It is not a normal profit or income. Okay, after taking out all the adjusting the income expenses, it has to be shown in the balance sheet in the contingent. I'm not expert in the accounting, but still, what I felt, I thought with my experience and sharing. Over to Raju.
Thank you very much. We have already overshot by 10 minutes, sir. And special thanks to CA Rekha, Uma Shiv, and to Hindustan Chamber of Commerce. Thank you.
Thank you, sir, for winding up the session. I think I should be thanking both the speakers, Gopalakrishna Raju sir and Dhanpan sir, for this very enlightening session. I think the feedback that you got from the attendees, I don't have to speak much. It speaks for the session. So thank you so much for patiently taking up all the questions and replying them back. Thank you so much, sir. And again, once again, thank you, Hindustan Chamber of Commerce, for giving me this opportunity and also giving a chance to the members to get enlightened on these topics. Thank you.